Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of 3 public companies. First, you'll see an interview with CEO of CytoDyn, stock symbol CYDY on the OTCQB. CytoDyn is a late-stage biotechnology company with near-term commercialization of an HIV combination therapy that met its primary endpoints in its recently completed phase 3 trial. The company is using the same drug to target immunology and cancer indications and just filed its phase 2 protocol for a basket trial that's targeting 22 solid tumor cancers. Learn more from the CEO later in the show. The next interview will be with the CEO of Seeing Machines, stock symbol SEEMF on the OTC and SEE on the London Stock Exchange. Seeing Machines is an advanced computer technology company that designs AI-powered operator monitoring systems to improve transportation safety. Later, you'll learn about their innovative technology when we speak with the CEO. The final interview today is with the CEO of NameSilo Technologies. Their stock symbol is URLOF on the OTC and URL on the Canadian Stock Exchange. NameSilo is one of the fastest growing internet domain registrars in the world. You'll learn more about their high growth operations later in the show. Now, before we get to our first interview, our quote of the week. It comes from the book Small Stocks, Big Money. You may have to work 10 years on a company to make it successful and achieve a healthy return on your investment. This quote comes from Phil Sassower, featured in Chapter 9 of Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Order your copy today at redchip.com or on Amazon. Now let's get to our first interview. It's with the CEO of CytoDyn.
Nader, thanks for being with us today.
Thank you for having me, Dave.
Now, CytoDyn is developing innovative treatments for multiple therapeutic indications. I want to start with an overview of your development pipeline.
Yes, thank you for that. Combination therapy in HIV, monotherapy in HIV, prevention in HIV, and we have a cancer indication, very exciting to us, is triple-negative breast cancer, colon cancer, and hopefully now we're going to have basket trial, which will allow us to enroll 22 different solid tumor indication for cancer. And we also have GVHD, graft versus host disease, and NASH, NASH, and also we have a trial for colon cancer.
Let's talk about your phase 3 trial that you actually completed for your combination therapy for HIV.
Yes, that was a very exciting result. We hit our primary endpoint. We met with the FDA. They granted us a rolling review submission. We submitted 1/3 of the final application, which is BLA, Biologic License Application. 2/3 will be submitted this month, and we will be done. And then 6 months later, because we have accelerated approval, instead of 1-year standard, 6 months later, we should have approval.
Talk to us about this partnership you have with Samsung and Viera.
Sure. The Samsung folks, they looked at our company a year ago and they thought it was very impressive. After checking our data room, everything, they agreed to defer $60 million worth of payment to a later time where we get approved and be able to do better job on paying it, because we had no funds, but they believed in us. So we got that great agreement with them. And now we will have about $500 million worth of product second quarter of this year. Viera gave us $87.5 million worth of milestones payments and $4.5 million upfront, which was some equity purchase. And 50% of the net sales goes to us. Cost of good plus 10% also goes to us.
So you are setting yourself up for commercialization of the combination therapy HIV drug. This is near term.
That's correct. And monotherapy also will follow right after that. We already sent the protocol to the FDA, and they had no problem to go forward with the protocol, but they do want to meet and finalize that protocol.
And how big is the market opportunity for the combination therapy HIV drug?
Combination therapy for us is about $2 billion, the market peak sales, and monotherapy, as Gilead reports indicated 2 years ago, is quite a bit larger than that, maybe $7-8 billion.
What are some of the key upcoming milestones investors can expect over the next 12 to 18 months? We talked about 6 months roughly to commercialization for the combination therapy HIV drug. What else can we expect?
1 out of 5,000 products make it to the commercialization. That we have that. We are one of the 5,000, we believe. And with that said, that's just the tip of the iceberg. That's only 1% of what we have. The 99%, which you should expect in the next 12 weeks, is the future of cancer could be in our hand. Our very impressive results in cancer will be tremendous news every month going forward. As we showed in the past few months, the stunning results of 3 patients having 0 metastasis, tumor shrunk, and all those good things that could happen. And we send a breakthrough designation application to FDA. So those are great milestones ahead of us.
So you have a phase 2 in breast cancer and a phase 2, I believe, in colon cancer. What are some key developments on the triple-negative breast cancer pipeline?
So with triple-negative breast cancer, because patients don't have any options and the lifespan is very short, we have filed for triple-negative breast cancer breakthrough designation, and breakthrough designation could give us approval, and that's about 60-day waiting. As soon as you file the application, you got 60 days. We filed it 20 days ago, so we got tremendous milestone ahead of us.
You do. It's actually quite amazing. The market cap today, as of this recording, is about $650 million. The stock's very liquid. As you said, again, as the date of this recording, about $11 million in cash, and you have a lot of warrants coming in at 70 cents that is bringing in almost daily cash into the company. So you seem to be very well positioned. Who are some of the key players on your team?
Well, Dr. Bruce Patterson is tremendous ex-Stanford professor who recognized one of the mechanism of action. We also had a lot of other key opinion leaders publishing paper about the mechanism of action in cancer with CCR5, which is, we are CCR5 antagonist. So we having Dr. Paul Madden, who was the inventor of this product, was with us for a while. And then we have now Dr. Robert Scully, our key opinion leaders. Also in our key opinion leader, Dr. Jay Toole, the ex-chief medical officer of Gilead, was with us for a while. So these people really help us to get to the point that we are with HIV and cancer.
I want you to recap on the main takeaway in your mind for investors today.
Well, you have a situation now that could be amazing for many people. Rush Limbaugh having lung cancer just recently, Alex Trebek having pancreatic cancer. I wish them to be able to perhaps try our product and see if it works. My own mother-in-law, stage 4 metastasis to liver, lung, brain, given 3 months to live, and now the doctor says if the progress is the same as it is, now she could live at least 3 years, if not more. Our animal study indicated 19 years extension to the cancer patient. These are unheard of. With 3 months extension, a product gets approval. So with us having this tremendous opportunity, is just mind-blowing for us, and we are looking at the data as it comes and release it to the public.
And I'll note that in the history of the company, about $228 million have been invested. Is that correct?
That's correct. It's very interesting that Progenics sold this product because they couldn't develop it any longer. And when I bought it, we now have a market cap of $650 million. Progenics, concentrated on their cancer product, have a market cap of $400 million. And we bought a product with $3.5 million down and raised $240 million almost. 90 million of that was without any bank involved. So it's amazing what this product can do, and we have been fortunate to be able to figure those things out.
Thank you so much for being with us today.
Thank you for having me, Dave.
Now, to get more information about CytoDyn, visit CYDYinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. Now, it's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Next, let's get to our second interview today with the CEO of Seeing Machines.
Paul, thanks for being with us today.
My pleasure. Thanks for having me.
It's my pleasure. Now, Seeing Machines is an industry leader in vision-based monitoring technology. Let's start with a brief overview of your technology.
So our technology is built on 20 years of research into human behavior, real-time scenarios, real-time observations, real-time data. We develop algorithms driven by AI and machine learning. We have specific intellectual property and capability in developing the optical pathway. We package all of that up in a way that enables us to really develop intelligence that enables machines to see.
Now, you recently announced a partnership with Qualcomm. Let's talk about that deal.
Yeah, so Qualcomm's obviously a very significant player in the chip space. Our technology that is embedded primarily in automotive vehicles, fleet and mining trucks, and aircraft training simulators requires significant computational processing power. So when you think of a relationship between someone like Qualcomm, who's very large, and someone like us, who is very technical and specialized, it brings some real value to the table for the world's largest automotive manufacturers. And I think what's been recognized, particularly out of this show that we've just finished at the CES in Las Vegas, is that driver monitoring technology will be in every car. So that's the interest of Qualcomm. It's also the interest of ours, and we're hoping that this partnership together can really drive our volume.
What's the essential value proposition? Why should investors take an interest in Seeing Machines today?
Well, there's a few reasons. One reason is to do with the history. So we've been at this 20 years, and new investors won't have to bear the burden of that long journey. So that's one thing. The second thing is that right now it's very evident that driver monitoring systems are central to the future of cars. So almost all of the new systems that are being deployed in today's cars and the cars of tomorrow, whether they be to do with semi-autonomous driving, safety, fully autonomous driving, all require some direction from eye gaze and head tracking. So driver monitoring systems are not the entirety of that technology, but they're central to enabling it to work. So I think the whole industry this week is totally convinced that DMS will be in every vehicle before too long.
How big is the market opportunity?
Well, there are roughly 100 million cars manufactured a year around the world. Regulators in Europe and shortly the rest of the world are mandating camera-based driver monitoring systems in all new cars from 2024. So the market size is 100 million units a year.
It makes sense. Talk to us about your business model. How do you make money?
Okay, so look, we focus on the transport market, and we operate in three sub-segments. Automotive vehicles, I mean, in that space, we are essentially selling software licenses, and those licenses are either integrated with other technologies that are being embedded inside a new vehicle, or via a chip, which may be a Qualcomm chip or a Xilinx chip, and we literally charge by vehicle installed. So as cars roll off the production line, we receive our license fee. We have a second business, which is what I call an aftermarket business, where we put the driver monitoring technology embedded in an aftermarket product into fleet trucks and mining vehicles. We have approximately 20,000 fleet trucks and mining vehicles. In that space, we provide a 24/7 safety service. So that's a recurring revenue business model. We bill by the month, and that enables large fleet owners to mitigate fatigue and distraction risk in their drivers. And then in the aviation space, our first environment is putting our eye tracking technology into pilot flight training simulators, and that's much more similar to the fleet business model. We sell an upfront license, and then we have a recurring royalty that occurs over the life of that contract. So there's a mix of piece rates in auto and recurring revenue in fleet and aviation.
Excellent. Give us a brief overview of your background.
Well, I'm a non-traditional CEO of a tech company. Let me just say that. So my background has been in investment and corporate advice. I spent 10 years with a global multinational in Australia called Brambles. I was the CEO of the Asia Pacific CHEP business, and the global head of strategy, planning and innovation. So I really come at this from a corporate perspective. Part of my job here is to help corporatize the business and improve the level of internal performance and external performance. But I have a very strong background in supply chain, manufacturing, and services.
What are some corporate milestones you hope to achieve in 2020?
Great question. 2020 is a very important year for us. We'd like to ensure that the relationships we've built with the likes of Qualcomm and Xilinx are successful, and we hope to win some additional OEM business. We're focusing very heavily right now on Japan, which is looking very, very good. On the fleet business, we have an objective to increase the volume of installed units by more than 70%. So that's really important to us. And this is the year where we expect to see the full-blown launch of our eye tracking technology into the aviation space, into those pilot training simulators. So they're really our three goals for 2020.
Well, you've actually answered my final question, which was, what's the main takeaway for investors today? Anything you want to add?
Look, the thing I'd like to point out is that it's very unusual for a very small company like ours that's been involved in R&D for 20 years, I think, to be at a point where the entire industry is saying your product will be in every vehicle. And safety regulators around the world are actually supporting that movement rather than fighting against it, which is often the case. So there's a technical take-up rate, there's a market change, and there's regulatory support, and it's happening right now.
Timing sounds good for investors, Paul. Thank you so much for being with us today.
Thank you very much. It's been a pleasure.
Now, to get more information about Seeing Machines, call us at 1-800-RedChip or email us at info@redchip.com. You can also visit our website, redchip.com, to send us a message if you have any questions. Now let's go to our last interview today. It's with the CEO of NameSilo Technologies.
Paul, thanks for being with us today.
Thank you, David.
Now, I want to start today with your giving us an overview of your company and your products and services.
Sure. Well, NameSilo Technologies is a domain registrar. So if someone has heard of GoDaddy, which I think most people have, you get a rough idea of what we do. We provide domain registration and a myriad of website services that anyone needs to build a website presence or to have an online service.
What would you say is the essential value proposition? Why should investors take an interest in NameSilo today?
Well, we are one of the fastest growing domain registrars in the world. And actually last year, if you take the last 12 months, we were the second fastest growing registrar out of roughly, well over 2,500 in the world. And we literally grew faster than companies like GoDaddy and Web.com and a number of other well-known entities. So, apart from the growth itself, we're a profitable business. And we are expanding rapidly and able to capture that with almost pure word of mouth. We have almost zero marketing spend. So we're really one of the anomalies in this industry: high growth, high profitability, and expanding margins.
Well, you reported record revenue and record earnings in the third quarter. What accounts for that growth?
Well, we've just doubled down on what we do well. We provide the lowest cost for a typical domain. And what's been happening is the industry is recognizing that, customers are recognizing that, and we're getting more word of mouth traffic. And with that, on top of the additional services that we launched recently, we're seeing that continued growth. We've managed roughly a 65% compound annual growth rate over the last 5-6 years, and we see no reason why that's going to be able to slow down.
How big is the market opportunity?
Well, there's over 350 million domains registered every year, and this is a business where every year our customers have to come back to us and renew their domains. So there's a significant amount of repeat revenue that we get in this industry, but the industry overall is growing at about 5% a year. So you can categorize the industry as about a $3 to $4 billion industry, of which we're one of the top fastest growing ones in there.
What are some of these new products and services you recently launched?
So almost all the growth we've seen up to date has been specifically on our core domain product. So, URL, a domain name that somebody is looking to purchase. What we've launched now is hosting services and email services, premium DNS services. So a myriad of different things that people need to either have a web presence or improve their web presence. And there's a whole bunch of other services that we've launched as well that are geared a little bit more towards the professional domain investor. So things like brokerage services, a marketplace where people can buy and sell. There's a whole bunch of different services that we add on. And what's nice as well is we now are getting a lot of third-party companies that have new technologies, and they come to us to try to have us resell their product on their behalf, and we split the revenue. Nice piece there is that we have very little cost to bring on these services, but because of our large and growing customer base, more and more of these companies are coming to us to try to partner with us for that.
Let's talk a moment about your management team. Who are some of the key players?
So, our team's made up of several individuals that have deep domain experience. Christoph Ronka is our operating CEO. His sort of claim to fame is he took a company called AdParlor from scratch and built it out to $100 million run rate revenue before it was successfully purchased. And really what we've done with this is he's sort of put the band back together, so to speak, and brought some of his key technical people as well. So the deep experience they have in running an online business and running really a marketing business, they've been able to transfer it here. And with that, we've also brought on two key individuals who were responsible for another domain company startup, which they eventually sold to web.com. So we've got deep industry experience and a lot of sort of technical experience around being able to grow an online business almost in a guerrilla fashion, which really is the kind of business we're running here.
How have you capitalized the company thus far?
We're a public company. We raised money to do this transaction about 2 years ago. A lot of that is money that a lot of the insiders put forward. We've been not needing any funding because we are profitable. So we're stewards of our capital. We're large shareholders ourselves, and we continue to insiders continue to buy. So the capital is being carefully stewarded here. But it's the old-fashioned way. We put our own money in and we try to treat it well.
To recap, Paul, what's the main takeaway for investors today?
Well, we've got a rapidly growing business that's profitable. It's spitting off a lot of cash, and it's completely unrecognized within the investment industry. We trade at a fraction of the metrics that all our publicly traded competitors like GoDaddy and Two Cows and Endurance International. There's a number of them out there, but we're trading at a fraction, and yet we're growing significantly faster than they are. So I think just from that standpoint alone, we think we're a tremendously undervalued investment.
Strong growth, record revenue, record earnings, insider buying, very large market opportunity. There's a lot to like here. Paul, thanks for being with us today.
Thank you so much, David. Thank you.
Now, to get more information about NameSilo Technologies, call us at 1-800-RedChip or email us at info@redchip.com. You can also visit our website, redchip.com, to send us a message if you have any questions. Now let's recap the 3 public companies you saw today. First, you saw an interview with CytoDyn, stock symbol CYDY on the OTCQB. CytoDyn is preparing for commercialization of its HIV combination therapy, which successfully met its primary endpoint in a recently completed phase 3 trial. It's estimated this therapy alone could generate more than $2 billion in revenue annually, and sales are expected to commence in late 2020. Additional trials underway are targeting immunology indications, including graft-versus-host disease and NASH. And the company just announced it filed a phase 2 protocol for a basket trial targeting 22 solid tumor cancers. Wall Street is already beginning to take notice, and the stock is seeing strong momentum to the upside with millions of shares traded daily. Visit CYDYinfo.com to learn more. Then you saw an interview with Seeing Machines, stock symbol SEEMF on the OTC and SEE or C on the London Stock Exchange. Seeing Machines is a world leader in human-machine interaction. The company's innovative computer vision technology is making our roads and air safer by monitoring drivers, pilots, and more for drowsiness and other distractions. Already used by some of the world's most recognizable businesses, Seeing Machines is making a big impact on safety around the world. Learn more by calling us at 1-800-RedChip. Then you saw an interview with NameSilo Technologies, stock symbol URLOF on the OTC and URL on the Canadian Stock Exchange. NameSilo is one of the fastest growing domain registrars in the world. As a low-cost provider of website domain name registration and management services, NameSilo currently serves over 300,000 customers in 160 countries and currently manages approximately 3.4 million domains. Give us a call today at 1-800-RedChip to learn more. Again, if you have any questions about today's featured companies, call us at 1-800-RedChip or email us at info@redchip.com. I'm John Cunningham. Thanks for being with me today, and remember, while small caps can provide significant gains, you must be prepared for the downside. Many of the companies featured on the show today are RedChip client companies, so please always read our disclosures at redchip.com. Thank you for being with us today.